Let me know when we're good to go.
It's good.
All right. Call the Board of Aldermen work session to order. First on the agenda is the 3-month budget review. I guess that's you, Stephen, right?
Yep, that's right. I need to do the screen sharing. Looks like it just says the host has disabled it.
In 1 second, real quick too. Hey, Angie, are you here just for the farmer's market MOU? That'll be closer to 7 if you don't want to get bored by our budget discussion. But you're welcome to stay. It's super exciting stuff.
You should be good, Stephen.
Okay. All right, there we go. Okay, is that, let's see. Trying to make sure I can.
Yeah.
There we go. Can you see those slides full screen?
Yes.
Okay, great. All right, well, it's a pleasure to bring you our budget update tonight. Tonight we'll be taking a look at our first quarter of fiscal year 21. This data will be through January 31st of 2021. We'll be looking at the months of November 2020, December 2020, and January 2021, and the activity in those months. Just a few comments before we get started. These projections for fiscal year 2021 aren't yet updated. We'll take a look at those projections and try to sharpen them up a little bit as we make our way through the year. Probably around 6 months of activity right there in April 2021. We'll be able to take a look at the revenue and expense projections and get those updated. And we've been working to develop a new forecast tool that utilizes run rates. And so we hope as we get at the 6-month mark and the 9-month mark, we have really good sharp projections of where we're going to be that'll help us do end of year projections well. So those will be coming. And then tonight's budget figures that you see include the budget amendments that the board has previously approved. The board has approved budget amendment 1 and 2 in December and also in February or early March on budget amendment 2. And just looking at the expenses, we have about 6 of this fiscal year's 26 payrolls included in the first quarter. So that's nearly a quarter of wage-related expenses that have been paid through those first 6 payrolls. So you'll see that information in there. So we'll start the budget amendment, we'll start the budget presentation tonight, looking at the general fund. Looking at general fund revenues for fiscal year 21, we've budgeted about 4.6 million in revenues, and we've received about 1.7, and that percentage is about 36% of what we've received to budget. The reason that's so high, as you probably all well know, is we receive a major disbursement of property tax in January of 2021, and so that bulks up that percentage. You'd expect to kind of receive about a quarter of your revenues through the first quarter, but the percentage is a little bit inflated because of that property tax disbursement. And then looking at the expenditures in the general fund, we've budgeted about 5.7 million for fiscal year 21, and we've received about 1.1. We've expended about 19%. A lot of those expenses are operational and payroll related. And as we move through the year and finish some of the signature projects that we've been working on, such as the City Hall renovation, which is about a $315,000 project, and the general fund portion for Streetscape Phase 2, as we pay for those projects, you'll see that percentage, I think, at closer to 50 and 75 as we work through the 6 and 9-month update. And feel free to ask any questions along the way as well. Be happy to help answer them. Looking at property tax revenue that we've received in the general fund, we budgeted about $887,000, and we've received about $867,000. So we've nearly received our budget property tax. As far as I know, there's a little bit more property tax that kind of trickles in throughout the year, and the amounts that we receive kind of get smaller and smaller as we go along. One thing that we're actively working on is Cynthia, Anna, and I are working to prepare the amount of TIF property tax that's owed to the taxing jurisdictions that have tax levies in place and would be owed their respective portions for the marketplace TIF based upon the increment and the growth and assessed valuation out at the TIF. So we're addressing and planning to make that transfer in the second quarter of fiscal year 21. And the other thing that we incorporated in this presentation are some trend history. And so we've got some additional slides in here showing you that for our major revenues. Looking at property tax revenue trends for quarter one, it's good to see this, that we're seeing gains in property tax each year as new improvements and additional parcels come to the city. Seeing that go from 760 to 810 to about 870 through quarter one. We'll take a look here at sales tax next. In 21, we budgeted about 1.2. Year to date, we've received about 270. That percentage is about 22.5% for sales tax received to budget. On average, in the past 3 years, we receive about 23% of what we end up having by the end of the year in the first quarter. So we're pretty close to that target, which is good. And while we're a little bit under 25%, I looked ahead at February prior to tonight, and February collections looked really good compared to previous Februarys in previous years. So at the 6-month update, I'll be excited to see where we're at, and I anticipate being at or above what we collected in previous years at the 6-month mark. Looking at sales tax for quarter one, we saw an increase from 2019 to 2020. And then in 2021, we're very close to where we were in quarter one of 20. But again, once we get through our 6-month mark, that month of February has looked really well. So I anticipate us to be at or above looking at the 6-month mark. Looking at use tax revenue, this has been a bright spot for us in terms of what we've received versus budget. We budgeted about $414,000 for this year, and we've received about $119,000. So that puts us about 29% received of our budget. On average, in the past 3 years, we received about 18% of our use tax by the first quarter, and a lot of it'll roll in as we continue through the year on some of the summer months, warmer months. So this has been a bright spot. I think as online consumer activity continues to grow and becomes a popular method for making the purchase of goods and services, we'll see this continue to go up. Looking at use tax trends through quarter one, you can see 2019 and 2020 are very similar. And then in quarter one of 2021, we see that grow. We also, I think we touched on this in Finance Committee meeting, we collect use tax for our special sales taxes. So with Park and Stormwater, we see some of that growth there as well. Moving on to our Capital Projects Fund. For our revenues in fiscal year 2021, we started our year with a budget of 0. In tonight's budget amendment, we have in Budget Amendment 3 a proposed amendment to add about $260,000 for the RTP grant that's associated with the Main Street Trail. And then we also have some money that we're proposing to receive for payments in lieu of dedication for development that was unable to add to park space and add to open recreational land. And so in talking with Jack Hendricks about where to put that and where to segregate that money, we thought it would be best in Capital Projects Fund, since that money is solely intended to pay for capital improvements. So we have received that money in fiscal year 21. We just want to have the budget amendment there to formalize it. Looking at the expenses in our Capital Projects Fund, we budgeted about 1.6, and that's mainly composed of the carryover budget for Main Street Trail, about 1.1, and some money that we've budgeted for Streetscape Phase 2. And our year-to-date expenses of about 410. Almost all of those are for the money that's been paid for Main Street Trail as we've completed that work. And I think we're getting pretty close to finishing that. So expecting by the 6-month mark to see those expenses really go up as we finish that project. Looking at the capital improvement sales tax fund, we budgeted revenues of about 530, and we've received 130 through the first quarter. So we've received about 24.5% of those budgeted revenues. Typically in the past year, since this is a new sales tax, which I'll show you in the next slide, in the past year we were at about 22% of what we received in the first quarter as a percentage of what we did at the end of the year. So this percentage looks good early on to what we've budgeted. This sales tax isn't subject to TIF EATS collections. We talked about this a little bit in Finance Committee, that this sales tax was enacted after the TIF district was approved, so it is not subject to those collections. And then looking at the expenses for this fund, we budgeted about $750,000, and that's composed of a couple of capital projects there, streetscape projects, and the transfers that we make to the debt service fund to pay off debt. So we'll get rolling on those payments to debt service in April and September as we make those payments and as we get these expenses paid for the projects. Looking at capital improvement sales tax received for quarter one. Here to my last point in the slide about this sales tax beginning in November 2018, which was the first month of fiscal year 19. We didn't receive a lot in that very first month as that sales tax was enacted and was put on the books, and businesses responded and began to pay and caught up. So that's why you see that quarter one so low. As that's been flushed out in quarter one in about 2020 and 2021, we see collections of about 130,000. Looking at our debt service fund, it's pretty typical looking at past presentations that we didn't have any activity at this point through the first quarter. That activity picks up in the second quarter and the third quarter when we make our general obligation debt payments. So on the 6-month review, we'll see expenses for the payments made, and we'll see the revenue coming in from the capital improvement sales tax fund. Looking at the transportation sales tax fund, we budgeted 530 for that this year, and we've received about 128. Again, this is looking good. We've received 24% of that budget, and on average in the past 3 years, we're at about 23% in the first quarter of what we end up receiving. So this looks good early on, again, from a budget standpoint. This sales tax is subject to the TIF EATS collections. We talked about in Finance Committee, it was enacted prior to the establishment of the TIF district. So per the agreement, we peel off for those businesses in that TIF. Looking at the expenses for sales tax, we've budgeted about $955, and we've expended just over $34,000. A lot of that is with repairs for street and maintenance. And we also have some engineering for Bridgeport Roundabout that we've started to spend on in the second quarter, and some money set aside for streetscape. A quick look here at the revenue for sales tax for transportation in quarter one. You can see we've seen steady growth from 19, 20, and 21. And again, just like in the city sales, we've seen good February collections. So I'm looking forward to sharing the data for the 6-month update and see how that's progressing. Looking at our combined water and wastewater fund, we budgeted 4.8 in revenues for 21, and we've received about 1.2. So this is looking really good from a first quarter perspective. This gives us a percentage of about 24.5. So it's very, very close to that 25% mark. This budget is about 80% built from water and wastewater sales from our utility customers, and then some other revenues, including late fees and disconnects and impact fees. Looking at the expenses for this fund, we've budgeted 7.5 for 21, and we've expended about 800. So that percentage is a little bit lower than the 25% mark looking through quarter one, but a lot of it has to do with starting to pay on these projects. And some of these projects we've started to finish here in the second quarter. We've made final payments for the wastewater master plan. We're closing in on Main Street water line construction, engineering, and some of these other major projects we're making progress on. So we'll see the expenses start to post there as we move through the year.
Hey, Stephen.
Yeah.
Why'd Chuck let you use a stormwater picture for wastewater? We don't want wastewater in those pipes.
That's true. I think I made a picture error. Yeah. I was pulling some pictures together, and I don't think I picked the right infrastructure piece there. I'm gonna work with Chuck on pictures from now on.
He likes to tell me we don't want that wastewater in our stormwater in our wastewater. You know.
Looking at the water and wastewater sales revenue, we've budgeted about 2.5 million in water sales for this year, and we've received nearly 600,000. That's about 24%, so that looks good from a budget standpoint. And in the past 3 years, we're about at the 22% mark of what we receive by the end of the year. So this again looks good from a budget standpoint. And then in wastewater sales, similar story, budgeting 1.7, collecting about 400. This one's really on the mark for where we typically have been in the past 3 years. And here you can see the growth over time in water and wastewater sales through quarter one. Both water and wastewater have steadily climbed as rates have been changed and counts are added and the city grows. Looking at the Sanitation Fund, in 21 we budgeted revenues about 890 and we received about 212. That's about 24% of the budget received, which is pretty much on the mark for the past 3 years for what we received by the first quarter. And then looking at expenses, 885 budgeted with about 220 spent, and so that's right on that mark of about 25%. We pay WCA on a monthly basis for the waste collection services, and then at the beginning of the year we also participate in the household hazardous waste program. So that's about an $11,000 bill that hits up front. And so that's why you see your expenses just a little bit over those revenues through the first quarter. This next slide really illustrates that pretty well. This happens every quarter for year after year after year. You see expenses just above that revenue line each first quarter because of the payment to the household hazardous waste program. And then looking at a newly approved fund and sales tax, this is our park and stormwater sales tax. We budgeted about 442,000 for that in 21, and we've received about 90. That percentage is a little bit lower than 25%, where we'd like to be. But one of the reasons you have to look at the first month that this sales tax was in effect. We collected about $13,000, and again, it's kind of that story that as the sales tax gets enacted, the businesses make sure it's on the books, get the sales tax paid. And so we're starting to see those collections really pick up. It's also good to keep in mind, this one is not subject to TIF EATS collections because it was enacted just last year, well after the TIF district was in place. Looking at our expenses, we haven't expended out of this fund yet. We do have some great projects that'll be completed here as we look at our splash pad improvements, our master plan, and stormwater projects that we'll spend on. And looking at our last fund for the evening here, the Vehicle and Equipment Replacement Fund, or the VER. In 21, we budgeted 165 for this fund, and we've received 40,000 via a transfer from the general fund for our seed funds. And this is about 24% of the revenue. We also have additional revenue budgeted for the sale of our turn-in vehicles. So this is something Chuck and I have actively been working on as the days have gone by in this quarter, coordinating with Enterprise, getting our vehicles turned in, getting our new vehicles from enterprise and getting those activated for the employees. So we're starting to get some of our turn-in vehicles selling this month, which is great. And we'll see some of those sales start to trickle in as revenue at the 6-month update. And then looking at the expenses, we've budgeted about 125, and that's really for the leasing expense from enterprise to lease those vehicles. We started to get vehicles on board in January, I believe. And so our first bills have started to come in February. So at the 6-month update, we'll start to see some of those leasing expenses be incurred. And that's all I had prepared for tonight's 3-month budget update. If you have any questions, I can take those now for you.
Any questions? I can't see everybody on one screen, so if you have anything, just unmute and go for it.
I don't have any questions, but thanks for the good presentation, Stephen. Appreciate it.
You're welcome.
Yeah, I like the format.
And Mayor, if I might also, I want to follow up on Alderwoman Wilson's comments. Stephen, thank you very much for the information. As the mayor said, appreciate the format. Stephen's just about 5 months on the job now and had to jump in with adoption of a budget that had been put together by you all and start learning it. But then also had to jump in on the next item with our auditor showed up, I think, on week 2 of his time here. And as we'll have ongoing discussions in the coming months, and he alluded to also, you know, we started with the TIF at Marketplace, and he and Anna are getting up to speed on that, understanding the contract, and then also those allocations out to the taxing entities. So appreciate his getting up to speed in all of this and providing the information in a succinct way. We will begin working with staff on development of our 2022 budget. We have meetings actually scheduled in April, and we'll have gone through all of those on a departmental basis prior to the board retreat in late May. So we're looking forward to those discussions at that time.
Cool. Anything else? Now we'll move on to the audit presentation. All right, you guys are on the clock.
All right. And Linda, if it's all right, I'll share my screen next to share the presentation with everyone.
You should be good to go.
Okay.
First off, I'd like to thank everybody for having us here tonight as Harold gets that up and on the screen. You know, as mentioned, we were out, I think, on Stephen's 2nd week, so it was kind of a shock for him, you know, being a brand new employee, but everything went smoothly. And again, thank you for all the assistance this year. On the next slide, we have an agenda. First off, we'll do introductions. Myself and Harold Ray are on the call tonight. Then we will go over required communications, internal control communications, and then finally the financial results. First of all, here's the audit team. There were 4 individuals involved with the audit this year. Harold Ray is the signing director. He is here tonight. Myself, I am Jason Moses. I'm the manager on the job. I handled the day-to-day activities of the audit. And then we also had Callie Rauschenbach and Jordan Townsend, who did more of the test work during the audit. Next up will be the required communications. This is also known as the governance letter. This is a very high level overview of the entire audit. Touches on multiple different places, very boilerplate. It's a report that we issue every year. We discuss significant accounting estimates, difficulties encountered during the audit, changes in accounting policies, and various other miscellaneous items. There was no big changes over the prior year as a result of the audit or change in accounting policies. So there's nothing new to report on the governance communication. Next up, we will cover the internal control communication. These are items that came up during the audit that we wanted to present to the board and to management just to make sure that they are aware of everything that was going on. Material weaknesses are deficiencies in internal control that there is a reasonable possibility that a material misstatement would not be prevented or detected or corrected on a timely basis. We had 3 items that we wanted to bring to the attention of everybody. The first off is the preparation of financial statements. This is consistent with every year. Due to the size of the city, we take on that responsibility as part of the audit. This is, again, consistent with cities of similar size to Smithville. The next would be adjusting journal entries that were discovered during the audit. Most of these relate to depreciation and other repair and maintenance items. The third item is repair and maintenance, which kind of relates back to the audit adjusting entries for fixed assets. We noted certain items that were expensed instead of capitalized during the current year. So we wanted to bring that to the attention of everybody. And on the next slide, we have one other matter. During our review of internal controls over the IT system, we noted that there were 3 users that still had access to the system that had been terminated. If I remember correctly, this has already been addressed and corrected since it came up back in, I want to believe it came up in October when we were out on field work. And then on the next slide, I will hand it off to Harold Ray to go over the financial results.
All right, so I'll kind of go over a high level of the governmental funds, and we'll look at some of the enterprise funds, look at debt levels, cash positions, things like that. So this is overall the revenues and expenses for all governmental funds. Include a couple red boxes here just to show some of the changes. Last year, expenditures were well in excess of revenues, but that was due to spending down some of the bond proceeds for streetscape projects and bridge projects. And then if you look at 2020, actually this is the first year out of the last 5 where revenues exceeded expenditures. So obviously that's a good positive result to see. If we look at months expenditures and fund balance, you can kind of think of this as a what are your reserve levels? How many months could you operate without any additional revenue coming in? If you look back at the last 5 years worth of trends, yes, it is lower than 2016, 2017, 2018, but really 7.8, almost 8 months worth of reserves is a good healthy number. Generally, you'll see anywhere from 3 to 6. You typically say is a good number, so definitely there at 7.8 points to a good, healthy organization. Looking at the different revenue sources, so kind of breaking it down between taxes, licenses, and fees, intergovernmental, which are grants, charges for services. You see the nice steady increases in tax revenues each year for the last 5 years. And I'll have a little more detail on that on the next slide. Really, the only other significant change that you'll see here is the CARES Act funding that came in for 2020. So it was about $945,000 increase in revenues there. Breaking down the different types of taxes, property taxes have seen nice steady increases the last 5 years. Just looking at 2020, that's about a 4.7% increase. Looking at sales and use taxes, there was the new parks and stormwater sales tax, but that didn't start until 2021, so you're not seeing any of that in here. But the capital improvement sales tax did start in the previous fiscal year. Looking at the year-over-year change in sales taxes is about a 22% increase. So good growth there. Looking at some of the reports that are available from the Department of Revenue, that increase is really just due to increase in the sales tax base. So a good indicator of some of the economic activities that are going on around the city. If you look at franchise taxes, there was a slight decrease there, 2.8%. Looking at other cities around Missouri, those are typically remaining flat or declining in most places. Most of the items there deal with like your franchise taxes on electrical service or gas service or cable service. You see a lot of people cutting cable, that sort of thing. So those taxes have seemed to remain pretty flat. Looking at the expense side, some of the highlights here, you'll see general governmental expenses. So it's kind of your administration was up 6% over the previous year. Police has seen some pretty steady growth over the last 5 years, now up to about 1.7, 1.8 million, or 9% increase over the previous year. Looking at capital outlay, you can see that was almost $4.5 million in 2019. Again, a lot of that due to the streetscape projects and bridge projects, and spending down of the bond proceeds with that. Looking at the principal and interest, some of those bonds did have principal payments in 2020, so you're starting to see a little bit of expenditure in that category. And then we added a new pandemic category for use of those CARES Act fundings in 2020. Looking at water and sewer activities, you see that revenues and expenses were both trending upwards for 2020. Looking at the, if you look at operating income and compare that to operating revenues, kind of think of it as an operating margin. Made about 30% in 2020, slightly lower than 2019 at 33%, but still pretty good overall. And then looking at the Sanitation Fund, mostly here the ins are going to equal the outs. You look at the total 5-year period, that operating income has been a positive $22,000. So, almost flat over the period, which you would expect. Looking at the city's debt levels for 2020, it totals now about $14.5 million. You can see the increases there in 2018 and 2019 from the general obligation bonds and the additional debt in the sewer fund for the projects as well. And then looking at the city's cash position, we're about $11.5 million for 2020. You'll see the high point in 2018 of $16 million. Again, that's from debt proceeds that came in during that time period, and we're waiting to get used, and most of that got spent in 2019 and 2020. So seeing the levels go down, but if you look back over the 5-year history, cash levels have still been increasing. So again, nice steady growth, good, healthy organization. And that was it as far as our financial highlights and going over the audit results. But if you have any other questions or comments for us that we can try to answer?
I'll ask a question. This is Alderman Wilson. They're working on our TIF project up there and starting to have to pay out on that. Is that I'm assuming a separate category that you will review in future audits, or will that just be incorporated overall?
Yeah, there's I believe a separate fund set up for that. With the state statutes, they kind of require that separate special allocation fund to account for those resources. But coming up in future years, we'll look at those allocations. There just hasn't been much activity there yet, so definitely be looking at that. And in addition, if you look at the financial statements, there is a footnote that talks about tax abatements and how much money gets abated through those TIF agreements. And so you'll see more dollars in that disclosure as well.
Is there anything in particular that you look at in those specific funds separate from like just what I would call the general operating, or is it just part of just a regular audit, separate accounts?
Yeah, I'd say it should just be a normal part of the audit process.
Okay, thank you.
Mm-hmm. Any other questions, comments?
Anyone else? Just speak up.
Oh, all right. Well, I do want to thank Cynthia and and Steven and everything for helping us get through the audit as well. Like mentioned, we were coming in early in Steven's tenure, and he was a great help as we were going through everything this year.
Thank you. Next item is the adjourning of the meeting, and then we're coming back to the same Zoom, right, Cynthia or Linda?
The same Zoom, correct.
All right. Well, I entertain a motion to adjourn. We can just hang out all night, I guess.
So moved.
Thanks, Barb.
Second.
Thanks, Alderman Wilson. All in favor of adjourning, say aye.
Aye.
All opposed, say no. See y'all in 25 minutes.